Hi there, Keith. Good to see you again.
And you, welcome back.
Yeah, a lot has happened since the last show that we did.
Yeah,
I think going back in time to then, if we were to look at the S&P 500, we were actually here somewhere, and who could have thought we'd have had this crazy rally in the S&P
yeah,
500?
yep,
Okay, so I've got here the agenda, but
yeah,
let's we can start. So first of all, I know that you've already given lots of updates on your portfolio on the
yeah,
Discord and on your channel, but perhaps for any of my viewers who might
yeah.
not be here, what's your situation report?
Well, my situation report is unbelievably shit. I every week I do portfolio matters and I go through the macro data, and fundamentally, you know, last year I expected that the rapid rise in interest rates from 0 to 5.25% in the States and also in the UK would kill the economy, lead to a recession, bad for equities, good for bonds. And I bet big that bonds would rally hard as inflation came down. Now, in the UK, inflation's come down a lot. Bonds have been rubbish, and I've got killed. And so I've had a really bad quarter. Actually made it back to pretty much flat by the end of last year, and then this first quarter of the year has just been absolutely awful. And actually, I made the hard decision on Monday to cut the portfolio, to cut my positions, to go back from ludicrously overweight long bonds to just heavily overweight long bonds. I still think that I will come out of this better than I am, but it's not been great. And bottom line is, you can only stay, maximum overweight for something if if you really believe it's working. And the last couple of weeks, UK inflation is coming down, and I just don't understand why UK bond yields are not coming down. So I took a lot off, gave me ammunition for if things go my way. Now, the fundamental problem for me is that I've been predicting a US recession for a very long time, and it just hasn't happened. And when I go through the data, every week in a lot of depth on portfolio matters, I mean, there's a lot of the signals that are showing that the US economy should be weak, and then you get non-farm payrolls out last Friday, and of course it is much stronger than people expect. Although all the indications are that non-farm payrolls showed the 303,000 jobs. They were all part-time jobs, but the economy, the markets don't matter. The markets have been ignoring, that. And actually, when you look at the kind of coincident data I've just been looking at, the US economy looks okay. The leading indicators have just all been wrong. So markets have been incredibly strong, given that the economy has not actually, the leading indicators continue to show weakness. But the market is looking forward to a cyclical upturn. The manufacturing cycle absolutely seems to have bottomed. And markets, equities are going great guns, despite the fact that interest rates are very high by historic standards. So, I've totally missed the equities rally and have got killed on my big macro call, which has all been very frustrating. But my game is I buy equities when the bloods on the street when, there's a recession, everyone's panicking, etc. And I've got this wrong. So I'm going to revert to, strategy, which is just wait for something to happen. And, when I see that positioning is so extreme in equities, then I think everything's kind of building up to something's going to happen. I think you certainly get a correction in the equity market, and then reevaluate, see how I feel, see what I think equity is going to do. But I needed to, acknowledge that it just wasn't working and take some money off the table so that I had some ammunition for when something happens. And going forward, I intend to be much less predictive and much more reactive. So, portfolio summary, it's been shit. So there you go.
Yeah, so it wasn't down that much though on the year. Only your portfolio was down 5% or something this year.
It was
So
down
it's
4%. No, this year it's shit. I mean, so I was closed last year down 4%, which was frankly a miracle, given I'd been down 20% at some stage. And now, I haven't done the numbers this week, but probably about 9%. And, everyone else is making money. Very frustrating. I've lost bucket loads. 9% is a big number. But now, the reality is, I've always made these big macro calls. Some of them could have gone terribly, but they've always gone right in the end. And, this one is the first one that's gone really badly wrong for a long period of time. And, lots of lessons to learn. I mean, frankly, because I got the biggest lesson to learn, frankly, is I just got the positioning size just totally wrong because I was just way overconfident. I did so well during the pandemic. I was thinking, I'm some sort of investment genius. But sadly, that turns out not to be the case. And, you've just got to, learn the lessons. And, as I hope you kind of work out from watching the
yeah, I mean, the thing is,
podcast.
There's very few channels where people actually go and announce what they're investing in and how they've done. The YouTube channels in investing, they're more like salesmen, and they don't do that. So I think it's great. I mean, I do that myself to some extent. I don't really reveal my whole portfolio, but I do.
Yeah.
I do cover when I buy and when I sell, as I research the stocks. And but the majority of YouTube pundits don't actually ever make a call.
Yeah.
So it's all credit to you to be because I think people are going to learn a lot more from the ups like you had a few years ago in the downs than from just someone who's just sounding good.
Well, thank you, Greg.
Yeah.
Actually, well, the thing is, I think you've seen from the podcast, I specialize in brutal honesty with everyone, particularly myself. And, when it comes to, acknowledging my many failures, I'm the first one there. And actually, what I'd say is running this YouTube channel, which I enjoy doing, it keeps me really, intellectually occupied. People are entitled to give me a load of crap because, I have got it entirely wrong. And, the whole aim of this channel is to, analyze the markets and give my kind of prognostications of what's going on and what will happen. And, I've totally got it wrong. But actually, people on the Discord, with, a couple of notable exceptions, have been, very supportive. I mean, the thing is, the reality is, everyone does their own analysis, and so I say how it is, and everyone thinks, you're wrong. I'm going to go off and, buy Nvidia, Simon W. And they get it absolutely right. I stick to what I think, and I get it totally wrong.
I mean, the important thing isn't just 1 year, though. I think you've done quite well over the last 10 years. So
I've lived off these markets the last 15 years, and I've done incredibly. And basically, I retired because I've made, as you can watch this video, my worst trade, Kazakh miss, to talk about what I did during the financial crisis, and that I took very, very serious risks in that during the financial crisis, and you can watch that. I had to increase the value of the mortgage to fund my
Wow.
positions, and but it all came good. I retired, and since then I've lived very well. And this is actually the first really big setback. And the bottom line is, I did so well out of the pandemic, which in part was luck. You can't, absolutely nobody could have predicted the pandemic.
No.
That I was just way overconfident, and but went in too big too early. Because I thought I was right as usual. Now I always
Well,
think I'm right, but like going
my
forward, I'm going to be a bit more circumspect,
like
he
my
says.
my mistake with the pandemic was was very. I spent the whole year practically in terms of equities. I spent the whole year researching equities. By the time I'd finished my researching, I'd missed 80% of the rises in all the share prices. But okay, I think actually you were already invested at the start of the pandemic, so you got the
No,
benefits.
actually,
Oh,
no.
so you actually got in at the good moment at the end of the crash
Well,
then.
actually, so I sold out of all equities in 2019 because I could see a recession coming. If you look at the leading indicators, etc., the market was very high, but all leading indicators were turning down. The economy was slowing. And so I just got out because that's my game. I kind of, I think equities are really dangerous when they turn down. I've lived through the LTCM crisis, the East Asia crisis, .com, great financial crisis, the pandemic. Regularly the market craps out. And actually, so my default game is when I think the market's overvalued, I get out, I wait. I wait until everyone else is panicking and then I buy. So the in 2019 I completely sold out. And then during the pandemic, when I had my eyes on Shell, to give you an example of like my strategy, and again I was way too early, but Shell, its share price I believe was £26 in 2019. I sat on my hands, but bear in mind that oil prices has gone negative in 2020. I sat on my hands, and it was really tempting to buy it when it got down to like £16. But I started buying it at £13.50. And as always, I was way too early. I bought it 12, bought it 11, bought it 10, bought it £9.50. I bought the last tranche at £9. And then, of course, oil demand comes back, as it inevitably would. And I did really well. But if you go back and look at the chart of Shell and all those oil companies, it was not a straight line. So I think, from memory, it was in March 20.
Yeah, I've got it here.
So no, if you look at that, so you see the sharp spike down.
Wow.
And then it goes right back up. So I bought at 9, and it went right back up. And then you had this just unbelievably frustrating 6 months where it drifted all the way back down again. And honestly, I was not looking very clever at that point because my average would have been, I don't know, £11 or something. But then, sold it all at, I think, 22. So,
Wow.
I did all right. It was great. Confidence high, ego through the roof. Promptly goes and fucks it up, So that's life.
Well, let's congratulations on the success over the long period before that, and I wouldn't beat yourself up too much because it's not that
Yeah.
bad a loss
Honestly, Rogue, it's bad.
for 1 year.
It's
Oh,
it's, and I've
hmm.
not feeling very clever, frankly. I've played this big macro game, and I haven't been very, haven't been right.
Well, okay. I'll try and lift the mood then.
Right.
I'll give
How are
you.
you doing?
I'm going to reveal for the first time, really, my portfolio performance. So this year I'm up actually 15%. Um,
Congratulations.
and for me, actually, I've had a very hard last 2 years. So kind
Right.
of how you're feeling now is how I felt for the last, well, over 2.5 years, basically since February, March, really, of 2021.
Yeah.
It's been a real struggle. What I've got here is the an index of my portfolio when I began my YouTube channel.
Yeah.
And this green line is a 10% return because I actually aim for a very overambitious, actually 20% per year, but I take out 10% a year. And
Wow.
so my target is to beat this
No.
10% return. So,
Fantastic.
but as you can see, I had a very difficult last few years because I was very defensively positioned, as we've
Yeah.
spoken about through these great Discord chats we do. In fact, all of them I've been saying, "Oh yeah, I'm defensively positioned. I don't quite trust what's going on," and very difficult. But luckily, this year I've had a real turnaround, and I don't like going into every detail of my portfolio and then putting it on the internet. But what I've done is I've got here the main things that I'm holding, getting out of, and getting into.
Right.
So I like to. Here's kind of my short list of ideas, and currently I have uranium and oil stocks, which are at the end game, and then I've got gold miners, S&P 500, stuff that I've recently got into. I got into gold miners only about a month ago, and S&P 500 end of last year, and so these I'm going to wait, and then hopefully sell when they're high, kind of thing. Rock Hopper Petroleum, I allow myself one speculative play a year with only 3% of my total portfolio, and
Okay.
that's my speculative fund for this year. And then
Can we just can we
yes,
pause on Rock Hopper actually?
mm.
So, I mean, I've been in and out of Rock Hopper over the years. So, what's the latest score with Sea Lion? Are they actually, as I take it, somebody's giving them some money or something? What's up?
No. So the current situation is they were with Harbour Oil, I think Premier
Yeah.
Oil, Harbour Energy, which was
Yeah.
some spin-off of Premier Oil or something. But anyway, Harbour Oil basically said they were going to develop Sea Lion and
Yeah.
then just didn't do anything for five
Yeah.
plus years.
Yeah.
And then
I
the share
remember.
price was really low. And then I'll put up their share price. And then a company called Navitas Petroleum signed a
Are they
deal.
really?
They're Israeli.
Yeah.
And Navitas Petroleum, um, yeah, here we go. So Navitas Petroleum basically took over all the exploration rights. However, we're still waiting. Now, there's also a side issue of the Italian government owes Rockhopper 190 million,
Yeah.
which they're going to monetize hopefully soon.
Really?
And there's also going to be So there's that, but then essentially we're waiting till the end of this year for Navitas to actually raise 2 billion to get this project started. And I actually I exited them last
Yeah.
year because got to rack my brains now. I did a whole video on it on why I did it, but I think it was
Yeah.
because they. Oh yeah, I know why I did it, because they issued a load of warrants, and they basically had to. I was worried that they hadn't sold 80% of the warrants, and they needed to have sold the warrants, or else they would run out of money. This company are literally going to run out of money in a year if they don't get this deal in off Navitas. And however, at Christmas, um, I they did a RNS where they had actually sold all the warrants after all in the
Mm.
last minute. So then I thought, okay, they've got money, so I'll place my bet. And to me, this is a speculative bet. Expect to lose everything. But I do think that things are in their favour more than before, because um, oil price is obviously looking
Yeah.
good.
Yeah.
Here's oil price, and also obviously with Israel's tragic issues. I think they want oil, so that does. So that
2 billion
also,
is a lot of money.
yeah. So that perhaps is favourable as well. So yeah. Oh, and also all the supply chain issues of oil, and all of these the Houthis
Yeah.
blowing up oil tankers. It makes, I think, the South America region more attractive as
Mm.
well as a source of oil. So we'll see, but it's just a speculative bet. Thanks,
Yeah.
Simon W. And by the way, great to see Richard Wilkes here. Really good to see you here, and also PHS. Thanks very much, PHS, for your help with the banking recently. Really appreciate.
Mm.
Um, and
But
Simon W's got a comment that it was Harbour bought Premier Oil,
yeah.
so that's how it happened.
So I've just posted the the chart of a life cycle chart of a mineral discovery, and the thing is, when it comes to rock hopper, wouldn't be buying it until its development actually starts. Because right now, even if Navitas actually do stump up the money, and God, this has been going on for so long now. Even if they do stump up the money, you're then talking about really long time of before anything happens, and during that time where they're developing it, etc., etc. There's nothing going on, and the share price tends to drift off. It will tend to drift off until the start of oil production is in sight. So I'd be waiting, frankly,
Yeah, well,
waiting.
I mean, if you look
Yeah,
here, I can remember these days with Rockhopper. With Falkland Oil and Gas, and
yeah.
there were some other ones, but um,
But
we're
actually,
here
Ro, can
now.
you do a well? Can you bring up the chart of Rockhopper, because it's the long term chart. Can you because if you bring that up, you'll see exactly that the life cycle chart works well for Rockhopper. Because if you go right back, and you got the discovery sent the share price absolutely through the roof. Yeah. So if you had bought it, early on, speculative, when they made the discovery, kaboom, you make out like a bandit. But, it's tracking the life cycle chart perfectly.
Yes.
Initial discovery, kaboom. And then
And
to development, just nothing,
I
we're
think
not anywhere near development.
we're
Yeah,
here at the
exactly.
moment. And if
Well,
they get the
yeah,
funding, I'll sell sell 3/4 the next day,
right.
the day they get the
Yeah,
funding for sure.
yeah,
And
yeah.
then it would be fun to hold on. Then it'd be I'm just reading Simon's comment, and then it'll be fun to hold on to the rest just for fun.
Yeah.
So anyway, I'll press on. So okay, so and so things that I'm thinking about at the moment are investing in India, banking, and
Sorry, Ray. Before you
mm,
can go on,
mm.
Simon W. just posted this comment. Russell Yu has taught me how to play these, been very educative. Simon, would you mind coming on and sharing that advice with the rest of us? Simon? No. Okay, carry on, Ray.
Yep. Yeah,
Here he is.
sure. Yeah. So yes, it was MATD that Russell educated me on. So it's basically you play these, as you say, on the very speculative portion of the game. So
Yeah.
when nothing is known about what's going to happen, you put money in and then you take your money off the table pre-results, basically, or pre-news, because there's a lot of speculation, as that bubble chart you've just shown shows, in pre-news. So, and that's before discovery, if you like.
Yeah.
Then after discovery, you get out because the risk is you don't know what development costs are going to be and what development time is going to be. So you're out then. When development financing comes along, you're still out and you stay out until you get to production. And then it's a different play altogether because pre-production, it's all about net asset values. And in production, it's all about production and price. So it's volume and price you're speculating on. In fact, then an oiler is basically a play on the oil price at constant production, which is much more predictable at that time. The cycle at the end, I'm not sure about because I've just played a gold miner, and I think there's more of a plateau at the end. So if you have a known production amount and you have a kind of fixed quantity, obviously with reserves in the bag, which are in mining are much more measurable than oil and gas, then that end part can plateau, and then you're just playing the price. Basically, it's a geared play on the gold price or the oil price or whatever. So you need to miss out all that portion of post news discovery to production. That's basically what Russell taught me.
Right.
Well, thanks.
Great.
Well,
Excellent.
hopefully, maybe I'll be learning that lesson in a hard way, and and then I'll remember for the next year's speculative play. And funnily enough,
Well,
actually, I was going through Cornish metals,
oh
which
yeah.
has been having an absolute nightmare since we went over it. Here it is. So as you can see, it's having a real nightmare. However, I established that tin was only 25,000. I did some calculations and worked out you'd need a 30,000 tin price.
Yeah.
And actually, tin's gone up to approaching the 30,000. So they're looking interesting all of a sudden. But anyway, so I'll press on. And yeah, so those are the things I'm kind of shortlisting. So I'll go through these as quickly as I can. So uranium endgame, and congratulations to. Unfortunately, he's not here now, but I know that on your weekly, Richard had diamond hands.
Yeah, he's still got it.
And sorry, I've got this one. And I basically had paper hands. So congratulations to Richard. Now, I only sold half, but my thinking is, look, I bought in 2020. It's a 3x roughly.
Excellent.
You know, and the problem was this was 20% of my portfolio. And I just couldn't. This was like at least a 20% drop. And I could not, for me, it was just the best thing to sell half. And I'm a lot more comfortable now. And like I covered in a video, the way I'm playing this is I've got a definite stop loss at $75, which would be the previous high here. The first thing is I don't go off the yellow cake share price, because that can swing from being a 20% discount to NAV to a 10% discount to NAV. So this I don't find so good. I'm using the actual uranium spot price,
right?
Not the actual equity price. And I'm very clear that at 75, I'll sell the rest. It'll be a 2.7x. Then I'm happy. But in the meantime, with my reduced position, I'm less. I can sleep at night better with all the volatility, and let's see what happens. And I'll have to, maybe I review my stop loss in the future upwards, but that's kind of where I am now, seeing what's happening. And oil. So oil, I got into in 2022, early 2022. I actually initially bought BP, sold that because the Russian invasion, and switched to Shell, and bought some Total Energies as well later on. But anyway, I'd identified that we was in this channel and we broke this channel. So it made me worry that we're out of the trend in endgame now. However, I did set a stop loss, and this is about halfway through last year, I think I'm talking about here, or late last year. However, to my surprise, even the share price has gone up since then, and so my situation now, well, we're in endgame. I'm probably going to change my stop loss now to be the bottom of this channel. And I'm hoping that I can hold on to these for years to take the dividends. And another thing I noticed, here's the long-term chart going back to the year 2000. And I noticed that oil tends to trade in this band here. So, and then whenever you get a big disaster, it crashes, and then that's always a great time to buy. And so I am thinking now, well, hopefully we get back into this band, and I could set a stop loss at, say, 8,000 or something, and enjoy the dividends.
Yeah, absolutely. Yeah. Sadly, well, I timed my exit from Shell incredibly well. Sadly, that I didn't get back in. I was instead bought, long bonds. So, although I
Well,
exited really well, it's been, overall, if I wanted to buy back in, I wouldn't be looking very clever. So, I need to, I'm just stick with my strategy. At some stage, that the oil price will crash. But right now, I mean, the thing about oil is OPEC is absolutely in charge of this market. And so if they were to open the taps, then the oil market could be very well supplied.
I've got
So,
another bit of luck here, which I'll just mention. Is I transferred my Shell from my normal account over to my ISA, and the day after I sold, that happened. So I got a lovely little bonus there as well,
you're
which was
right.
quite
Wow.
a rare kind of thing that happened. That was really cool.
Mm.
Um,
Yeah.
Sorry.
No, the thing is, what's happened to oil stocks is really interesting in itself. And actually, can you bring up the price of i3 Energy, please, Rogue?
Okay. I'll have to sacrifice Tesla first. i3 Energy.
The i3 Energy are UK listed. They've got productive assets in Canada, and they've got a dividend yield of 10%. So it's i3 Energy. Yeah, there you go.
I like the sound of a 10% dividend yield.
Yeah, and I sold it back in 2022, and that was a great trade getting out. And a lot of these small oil companies, their share prices just collapsed.
Wow, but
And I don't really understand why the majors, their share prices have really recovered. i3 Energy, there's nothing wrong with it. I can't see anything wrong with it.
actually, is it a onshore?
It is. It's onshore. It
Uh,
also produces quite a lot of gas.
so
But
it's the same as Star Energy,
yeah,
which interestingly has an uptick recently as well.
yeah,
Star Energy, all of this is all about their shale, which never
yeah,
happened. But the thing is, they actually produce, 90% of their revenues are from producing onshore oil.
yeah,
And also they are very undervalued. Very, very undervalued. I can't remember exactly, but at least by a factor,
mm,
50% or something of undervalued. Price to book of half or something.
yeah,
So I noticed that recently as well. So yeah,
yeah.
Simon's pointed out that Canadian i3 Energy is Canadian oil mainly.
Yes, it is. Yeah, it's kind of it is essentially Canadian shale. So
Yeah, I mean,
high.
yeah, I mean, I wonder actually, Simon, do you know about Star Energy? Have you looked closely at Star Energy? Um, do you think they could be worth getting, despite everyone hating them so much?
No, I'm afraid not on that one. Never heard of them, and sorry, don't know anything about them.
Okay. Well, okay, maybe I'll return to them another time.
I'll have a look though for you if you like.
Simon,
I've got the
yeah,
details on them. I know about quite a lot about them, but I
Okay,
wondered if you were aware of them. But
no.
I've got a video on them. I'll share in the Discord actually my
right.
data on them, my latest data on them. but they are very hideously undervalued, the same as i3 Energy.
Simon, do you have any idea why the majors' share price has done really well, but the small oil companies just have not at all joined in? They've been terrible in the last year.
I think it's an aim problem, to be honest. The smaller companies in the UK are pretty much shunned. So I think the tax issues, with Harbour and the anti-fossil fuel politics in the UK basically have made them untouchable. And I think that they're also fairly risky. But the AIM market in general in the UK has been pretty poor from a growth angle investor point of view for a number of years now, definitely since the pandemic, and very difficult to find growth stocks or good plays that have liquidity. The problem is the liquidity. As soon as you get good news, then the price goes up, and then all the short-termers, they take their profits and they run, and then there's no liquidity, and so it's very, very difficult to make money in the mid caps. The 250, I think, has severely underperformed the rest of the market, if I'm right, definitely up until last year.
Yeah, no, that's absolutely right. Now, so i3 Energy has a dividend yield now after it's rallied 20% in the last month. It's got a dividend yield of 8.5%.
And it's a bit like DEC too. I mean, DEC is a really good strategy with a good, well-managed company that investors in the UK just hadn't liked, and hopefully, now that they've got their strategy sorted, or the investors in the UK didn't understand, I think, was the problem. So there just wasn't enough liquidity, and I hope that now they're listed in the US, that'll remedy itself, and it looks to have bottomed, and there's a certain runway now of future certainty that means that it's a good constant returner.
I'm conscious of the time, but I'll just quickly show Star Energy. They've got a market cap of 9 million. They've got a MP. Well, over the next 5 years, their onshore oil is worth 61 million.
Wow.
So this is where their oil fields are in the UK. I've got their competent persons report. Actually, one reason why I'm not going to invest in them is they've got this tidal wave of costs this year. So but that's the only thing that would stop me. But I'm very interested in investing in them after the results come out for this year.
Really?
Because
the thing is, though, do you think they'll actually, given the environmental lobby in this country, do you think they will actually manage to get any oil out?
Well, no, these are all fields that are 50 years old, 30 years old.
Okay.
And they do tend to get planning permission extensions for these. I mean, here I've got their actual fields. This is something I've not covered in my Star Energy videos that I've done before, actually. So any Star Energy followers would be interested in this. I realised that they've actually could also probably, get rid of a third of these, sack half the people, and be there probably could be real efficiencies as well, potential efficiencies there, because they've got some rather large fields here, and then they're they've got at least 10 years of decent money coming in, because obviously when you get to here, you have to, then you have to start worrying. But really, it's not until at least 10 years before they start scratching around for the oil. So yeah, they look, for me, these are, is it 5.1 million now? I mean, this was 2022 when I did this, and the share price has dropped since then. But well, anyway, they're definitely undervalued, that's for sure. Oh no, this was when they were this was the Liz Truss period.
Well, that's
so
the
I've not.
Ivan share, isn't it?
Yeah, they're the same company. They changed their name. Yeah, they've changed their name to Star Energy. So okay, this is old, outdated, that is, but I updated the front anyway. I did this only a few months ago. This front page, I kind of updated it, and so they are looking hideously undervalued. Anyway, I better press on. And so yeah, so they're my things I'm thinking of going into. Sorry, they're things at my end game.
Yep.
And new positions. One was the S&P 500 at the start of the year.
Well done.
And I just can't believe my luck here. So just it looks like it could have turned. Well, no, I don't think you can't say that yet. But we've had an interesting week. But still, yeah. Overall, it's amazing. This is what I was expecting it to do in the blue line there, and this is what happened. So my general thesis is that the US has got loads of oil, it's hydrocarbon exporter, plus it's got the best companies in the world, so that's why it's doing well. And just going to enjoy this, hopefully. And I bought 6% of my portfolio end of last year, and I plan to top it up to 10% at the end of the year. Was my plan, but depending on what happens, I might not bother. I might just keep what I've got. And then the last thing I've invested in was gold. And as anyone who's been watching my channel, I spent the entire January, February kind of time, lots of individual gold stocks, and discovered that all the ones listed in England have got something wrong with them, one disfigurement or another. So I ended up just investing in the 91 Global Gold Trust, and this has all of the world's biggest gold companies. Now, the price of gold, why I kind of, I'm invested in gold firstly for technical reasons, because when you look at the technical chart, and I did a video on this, I think last October or something, or maybe last November or something, I did a video on this. But this is the most epic cup and handle formation ever, which spans over a decade. I mean, it's incredible. And there's the handle. Now, the moment we finished above that handle was kind of bullish, but I decided to be extra cautious and wait for it to beat the all-time high on the weekly. So when it did, I went in and bought those that gold fund, and
very good.
So, and but the good thing is, even though this was going up like the clappers, the actual investment funds were a bit sluggish, and it hadn't actually. So I was in a wonderful situation when I entered here, where this was still even, within this technical pattern, but the gold spot was was blasting off. So I've never felt so comfortable entering a position, and then now it's shot up, and I got a 13% return in only in a
Fantastic.
month. So that's been great. Sorry. So yeah, so not only was it the technical reasons was why, but also because in doing my macro analysis, I'm convinced that we're entering an era of massive money supply and inflation, and so as well, that's also why. So yeah, so that's covers my things I've entered, and then things I'm thinking about are banking and India. So banking, we're in this technically looking good. Look where it was before the credit crisis and where it is now. So you've got to buy low kind of thing. Interest rates were above 5% in the good old days for banking. I think there's a good chance that we might see prolonged high interest rates of, say 4%, 3%.
Yeah, that's an interesting idea, actually. I like that. Yeah, that's good.
And then I'll go on to this later, but also I think that with modern technology, it's going to be a lot cheaper to run a bank as well. So I think they could be now I've got to do the work. I've just started the work. But following doing the work, I may well, that's the next thing I'm working on. So people who watch my videos, you're going to be seeing me doing a lot of bank stocks in the near future. So you've provided Star Energy there, their long-term chart, and Simon has some info. So what's this information from Simon?
So I'm basically showing there the costs, and the issue has been in the last few months why gold miners have not followed the gold price, basically, and the issue has been that for the last year or so, cash costs and all-in sustainable costs have gone up quite considerably due to wage inflation, cost inflation for machinery and that kind of thing. And so they've been a bit left behind. With the rise in the price recently, this may change. But I posted this on the precious metals and gold channel because someone was looking for gold miners, and I was just saying, well, you need to buy, the most cash cost competitive or AISC competitive miners that there are around for a long-term hold, and that was a table that I found.
Yeah, when I looked at Fracillo, they actually had horrendous trend of not being able to mine gold and silver at a profit last year.
Yeah.
Even at record highs, they were loss making, and I think that they're going to end up doing well stock price just by accident by the price of gold and silver going up loads. But they're actually a rubbish company who they can't mine an ounce of gold at a profit at all time highs.
Can I just make a quick bid for Goldplat, which is a company I own. So Goldplat, they're not a miner. They recover gold from mine waste. And they have operations in South Africa and Ghana, and they're starting operations in South America. They're currently, they're now on a P ratio of 5.7, having risen 30% in the last 2 weeks, and that's all on the gold price. But basically, the Ghana operations are going really well. South Africa's a disaster. South Africa, they've been suffering like everyone else from the electricity outages, which means that they've had to shut down operations. And the South African operations, having been very profitable last year, made about 1.3 million, I think, for in H1 2023. They made pretty much nothing H1 this financial year. But they're getting diesel generators. Diesel generators should be online in the second half. And they've also got this enormous tailings facility. Okay, so they've stockpiled tailings. And the trouble is, and in these tailings are 80,000 ounces of gold. Yeah. So if they were to be able to process that, then there's huge upside here. And they're now in the process of building a pipeline to a local company that will start processing the gold. Now, obviously, they won't get the full value of that gold because it's being processed by another company. But if and when that starts to happen, you could see this, doing well.
Yeah, there was a company I looked at recently, and I can't remember if it was. No, it wasn't Hochschild Mining, so it must have been. PAF, Pan African Resources, and they're in South Africa, and I didn't dare invest because they're in South Africa, but they're doing the same thing, and I find it very interesting because South Africa was one of the first great gold provinces in the world. And you've got this situation where you've got all these abandoned gold mines all over the country, and they've got all these tailings lying around, which at the time were waste material, but which now, so you can't feasibly develop a mine in South Africa. You can get all the waste tailing mountains from when Africa was prosperous, and so they're doing the same thing as Goldplat. And I think I know. Richard's not here now because I was going to ask if he had any tips because I know he's really into his gold miners.
So what was that company? What was the company you were discussing?
It was
what was it called?
Pan African Mining.
Pan African Mining.
So, and here's their info. If you, what I'll do, I'll on the Discord, I'll post.
Do you mean Pan African Resources?
Sorry, yeah, Pan African Resources. Sorry.
Right. Okay. Yes, I used to own that.
What I'll do is I'll post these on the Discord.
Right.
As there's an interest.
Yeah.
And what was the other thing? Star. That was the other one.
Yeah.
Okay. So the things that I've obviously thinking about then are banking and then India, which which I had a look at the India to me.
Wow.
Like look at how the Nifty 50's done, and I've been looking at India. The macro situation is looking good, I think, And
Yeah.
I had a look at their stock market, and you go through basically their top companies are as big as our top companies. So I went into India
Yeah.
expecting it to look different than it did. With my sort of Western arrogance, you could say, or something. And
Mhm.
they were all really, good companies, and things like tech. They've actually got a better tech sector than we have.
Really?
And when you look at some of their companies, some of their tech companies, um, I think their biggest one is called Tata Consultancy. It's actually 80% or something of their revenues are in the US, even, or not 80, but say 60% or something of their revenues are in the US. So they've got international top companies the same as us, but I don't think they're valued as well as ours. So India is very interesting, but perhaps more on that another time,
Okay.
because that's actually the end of the first two lines on our agenda. so
Okay. Yeah.
unfortunately,
Yeah.
so as ever, but anyway, so the next thing will be the S&P 500, and maybe we can make these a bit more. We'll cut out the macro a bit and just have a general look. But yeah, Simon's saying, yep, I think India's now the future China. So I mean, I could show you. I will. I think I'll take the time to just share some of my India stuff because it was very interesting.
Okay.
So macro India. So Nifty 50. Here's the now. You can see here the India GDP is now overtaken out of the UK, and it's got this lovely exponential pattern. And when you look at China, now this is the IMF data. I disagree. I don't think it's going to do this. I think it's going to go
Yeah.
top from here. But just as China went through this beautiful exponential kind of trend, I think India may do the same. Is my kind of theory. And I've got here the macro data, and their fiscal situation isn't much. Is slightly better than ours and fairly stable. They did
Yeah.
throw away a load of money over the pandemic, though, but there
Yeah.
was
It
a
didn't
lot
have a
of.
lot.
But you look at their unemployment, and it's only 8%, and kind of stably, and that's a lot higher than ours. So they can have more GDP growth in the future, and they've got
Yeah.
plenty of young people to take on those jobs without the cost of labour then constraining the GDP growth. And when you look at these are the inflation interest rates in black, inflation in orange, and GDP growth in green. And although the numbers are a bit higher than we're used to in the UK, they do have a really good GDP growth, and the inflation, yeah, it's higher than us, but that kind of all of their goods are a lot cheaper than ours, like 100 times cheaper than ours. So as the country progresses, it doesn't seem too bad over when you put everything together. It looks to me awesome, really. And yeah, so
Yeah. Well, the thing is, there's historically, there's quite a poor link between GDP growth and the performance of the stock market.
Right.
I forget, but actually, if you do the, I remember reading a paper a long time ago about correlation between GDP and stock market performance, and it was quite weak. China being quite a good example. China's, China's still growing at 5% per annum or whatever, and the stock market recently has been shit.
Well, I think the India play will be better than the China play because the Indians have a far more open stock market to all and sundry newcomers or comers as well. And as Rogue mentions, they have a lot of companies historically doing business in the US, so they're quite directly tied to the US economy, which gives quite a good assurance that those gains will filter through to investors, whereas that wasn't the case with China. Playing the China market was really playing the commodities super cycle, which that was the way I played it anyway. It was very difficult. I went to China first in 1980, and it was almost impossible to get outsiders to take the gains from investments in China, and that lasted decades.
Right. The one thing I'd say about both China and India is that, and why I would be skeptical about both, is that ultimately the value of any company is in its ability to enforce contracts. And so in the case of China, I mean, I haven't touched it because you can never get your money out. Nobody actually gets, apart from, I think Alibaba pays a very small dividend, but everyone else, there's no way of getting dividends out or money out. So essentially, in order to make money from China, you had to rely on selling your shares to some other sucker. In the case of India, enforcing contract, the Indian courts are famous for how far behind they are in dealing with backlog of cases. And if you were to your company was to get into a court battle in India, the ability to actually enforce contract, I suspect, would be incredibly poor. So, not convinced.
Well, yeah, I mean they are making a lot of progress, though, I think. But I'll just show you this. They have here. You've got FTSE versus Nifty 50, and actually, digital technology is 17% of their stock market. And when you look at when I started looking at what they were doing, it kind of blew me away. I mean,
Really?
Tata Consultancy here, look, 53% revenues in North America, only 5% is India. So this company's as big as most in the UK. This would be a top 10 company in the FTSE 100.
The thing is, Rogue, I was thinking about this today. Because a lot of cheap, low-skill service sector digital jobs have been outsourced to India. And so my wife was trying to get hold of her mobile phone provider, whose name I forget. But anyway, it's one of these cheap companies. And so she phoned them up, and it was had been outsourced to India. And this Indian lady, was attempting to deal with her. And I was thinking this would be an AI chatbot would be cheaper, more efficient, and have got the job done in 2 minutes, as opposed to the 25 minutes she spent on the phone. So I think a lot of those cheap service jobs that have been outsourced to India, and which would come up as the digital economy in that chart, are likely to disappear quite quickly.
Well, the thing is, in the case of Tata Consultancy, these aren't chat rooms. These are actually guys. These are actually making the AI platforms.
Right.
They actually do
Fantastic.
AI. I mean, they do. If you look now, actually, one thing I'll say is when I've noticed, I've been looking at some tech companies, and I've noticed that if you read the introduction and the what we do bit, it's essentially a carbon copy of the previous year, but they've inserted AI everywhere in front of every 10th word. Everyone, all of a sudden, everyone's AI. So there is that, of course, but I do think though they are actually doing lots of digitalization work around the world. And then, here's one of their biggest. Okay, this bank, it's all in India. Okay, fair enough. This Bharti Airtel, it's okay. 67% India, 30% Africa. Infosys is a big
Yep.
tech firm. Maybe the tech supports in this bit, and the traditional IT core services, IT support services. You see, it's got it there. But still, the majority of what they're doing, it resembles a top American company more than a top UK company, frankly.
Mm.
And look at where they're, look at what they're working in. So anyway, yeah, sure, no problem, Simon. Okay, before we leave India, there's some other little factoids here. They rely on they rely heavily on coal. So India do have second biggest amount of supply of coal, but
Yeah, but you're right.
they
They burn it all in their power station.
They
Yeah.
burn loads of coal. They're actually a net import of coal, despite that, because 45% of their energy is coal, 24% is oil. This is interesting when you look at their imports and exports. They don't look that oldie worldy. I mean, compare them with. I think this is the UK here. Okay, this is India. Oh, okay. This is their imports and exports. Okay, yeah. So here's the UK for comparison. And so we have a kind of modern economy, okay? And obviously, if a country was more the kind of Venezuela part of the spectrum, then you'd expect it to be all, oil exports or cocoa beans or, or whatever. But actually, when you look at India's fingerprint here, it's not that bad. It's kind of half. It's more towards a developed economy than a early developing economy, I'd say. And then when you look at who they import to and export to, they're in a nice place in the current situation in the world, I think. And demographics. So as you can see, they've got a normal demographics. So yeah, the demographic here, you've got a normal. So whereas in the UK and Europe, no one's having any babies, and we're going to perhaps be entering a kind of Japanese kind of situation. In India, they've got a perfect demographics. So,
Actually, hang on a second, though, because actually, if you pause there, the UK one looks all right, actually, because what you don't want to see is a shrinking at the base. and actually the UK doesn't look that bad. It's not great, but if you were to do have a look at South Korea,
Yeah.
the bars at the bottom would be just absolutely dreadful. In the case of India, I mean, they're going to have a big demographic dividend in the next 10 years.
Yes.
So they've got, a bulge of young people coming through. And actually it's quite reassuring that they're, the 0 to 4 is shrinking. So that's good news. I mean, that means they're getting the birth rate under control.
Yeah, as they get more prosperous, the birth rate
Yeah.
declines. So, I mean, you're right. I perhaps do exaggerate a bit on the UK, but still, okay. So maybe a better way of putting it is they've got, unlike us,
Yeah.
where we're just same old, they've actually got a lovely birth dividend coming in the pipe.
They have. Actually, so just visually, is it me, or is there a distinct male bias in the Indian graph?
Yes, there is, which has to be. I don't know what to make of that.
Well, that's bad. In China, so in China, that would be because of selective abortions.
Well,
I don't know whether it's the case in India.
I would say it was more likely to be because you're more likely to die as a female than a male. I'd rather say that than, which is bad in itself, but I'd rather say that than say it's because of selective abortions. But I don't know. But you could be right. There's certainly a notable pattern. That is definitely a very suspicious pattern, has to be said. So India is something I'm definitely interested in. Investing in it, that's another matter. And there's this I can't invest in when I tried. It's X trackers. I'm looking into investing, and it is JP Morgan. This JP Morgan is a terrible return, not worth investing in. I think the X trackers Nifty 50 looks like the best bet to me, but of course you don't track exactly. But anyway. So what I'll do, I think we should skip. We can skip the S&P and FTSE, I think, and go straight into the banking. But first of all, Orange Cannon has a comment. If you're going to invest in India, get a holiday, get a good feel in 5 minutes. It's hard to explain without feeling it. Massive growth, massive tech parts, 3 minutes away, total poverty with zero infrastructure. I spent 2 to 3 months in Bangalore 10 years ago. It was a great experience. Simon says the poverty there is extraordinary, though. It might put you off. It did me. And this might explain the lower number of women in the poverty-stricken areas. You may be more likely to die as a woman than a man because of inequality. Does anyone want to? Okay, I feel like I've been talking a long time. Does anyone want to bring up? Has anyone got any questions now, rather than at the end when we're all in a rush to go? Has anyone got any topics they want to bring up, or any thoughts so far?
No, really interesting, Greg. Thanks for all your hard work.
Yeah, India stuff is really interesting. I think that's a future China for me. So I'm going to look at your Nifty 50 and see if I can benchmark it against my other risky bets. Ha ha.
Yeah. I mean, for me, it's when you look at the Nifty 50's progress, it keeps. I mean, actually, the one risk is it's been going up for 10 years. When's the top? You know, that's, you know, is it the, but it actually,
there isn't really a top. I mean, China was decades. You know, you have to these developments for GDP per capita to catch up with anything like the West is just forever. So long as the system supports it, i.e., the laws, the political system, as in China, you know, where you had two systems, a communist party but a capitalist economy. So long as the system and the laws and the leaders encourage it, it'll go on for decades. That's the political risk is the issue.
So for me, I look at it as, I mean, I want to actually, so to be honest, a lot of the reason why I've been looking at India is because there was nothing I could find in the UK to invest in. So I started looking around, and to me, I just love the idea, and it'll be a real long term investment is my plan. But and hoping that it's the next China. And I'm thinking of actually putting 10% of my portfolio into India, and just as a long term. Actually, the way I'm looking at it actually is, I'm going to sell when I sell the rest of my uranium. You know, that will be a nice return. So I'm just going to take a chunk of that, which will be 10% of my portfolio, and bang it into India, and then I kind of psychologically can kind of not care about it and try to ignore it, and then look back again in 5 or 10 years, and maybe it's done a China would be amazing. So uranium, when I looked at thing with uranium, when I looked at it last in detail, there doesn't need to be that much more mining to happen to supply the world with uranium, even with the future. So it's also it's almost a kind of impossible to know about commodity. You know, it's so opaque. The supply chain of uranium is completely an unknown, because you've got half the world's supply is by Kazakhstan and China and the Russia, and God, no one knows how much uranium's there. And then also you have all of this secondary market. Okay, what I'll do is I'll upload my uranium supply chain. So look, I have no idea what uranium's going to do. I have no idea at all. It's gone up a lot. It could double. The way I'm looking at it, if it doubles, great. I sell it all, forget about it. It could do anything. I've no idea. When I looked at it, when I first invested in uranium, it was because of this chart here, where there was less uranium being mined than there was being required, and also because of this chart here, because back in 2020, half of the 3/4 of all, 40% of all global production was going on at a loss. So 40% of all global production couldn't happen unless it was at a loss. So back in 2020, there was a clear case to buy. The problem is, here is the estimated supply of uranium. And as you can see, this line here is the estimated demand of uranium best case. However, this is the likely case. So there's a big area of uncertainty. So the thing is, over the next, you've got to remember, there's all this news about uranium at the moment, but they take 20 years to build, 8 years. Yeah, thanks PHS. I've not got an updated one to this. This was 2021, it looks like. But the thing is, there's a massive area of uncertainty here, and certainly according to the predictions there, there was a surplus. There's going to be a surplus in the next couple of years. So I know that on all the uranium channels, YouTube channels, everyone's getting really excited, but personally, it's a big unknown. What I'm trying to say is, back in 2020, it was almost like a dead cert, because people were mining uranium at a loss. Now, at the current price, everyone can mine uranium at a profit. So there's no reason for all these mines to be open. And I really, short but sweet, I've got no idea what the uranium price is going to do. I'm lucky because I bought ages ago. So I'm going to just hold. I'll definitely sell it all if it doubles. I'll see what happens and sell, but I kind of don't care. I'm looking forward to moving on to other things, but I wouldn't dare try to predict what the uranium price is going to do after it's 4x'd. And also look at what happened in the past. So yeah, I wouldn't want to dare, and I certainly wouldn't be buying it now if I didn't own any.
Thing is, Rogue, I think your instincts are absolutely right. I would get out. If the first sign of trouble, I'd get out, because the thing is, there were loads of uranium mines that were shuttered because they were uneconomic. Just as your chart showed, they were uneconomic at low prices. At these prices, they were economic.
Yeah.
So I've just posted a story from Fortune that about 5 uranium mines in the US that are restarting. There's no uranium is not that rare. When the price spikes, supply will spike.
Yes. Yeah. So yeah, and I agree, Orange Cannon. I mean, to be honest, the probably, what I'd say, the highest probability case is we have this bull market in uranium continues. Let's get the uranium back up. How much we don't know, but it may continue. Actually, it's probably going to form. It's either going straight back down now. There's a good. When I look at this technically, there's a good chance this could keep on going straight back down. But there's also a good chance it could keep on going. And who knows? But I think certainly in a year or something, it will definitely, the supply will come back if we are in a undersupply situation at the moment. But the thing is, of all commodities, it's the one that you can have least knowledge of to make an investment. I see I posted a comment about this on the Discord actually. I did a screenshot of all the uranium YouTube channels, and everyone's talking about, Cameco supply cuts, and Kazatomprom can't have been lying. They haven't got any left, and all this. But really, it's a complete blind spot. There's like a 50% blind spot when trying to understand uranium. If you compare that with copper or something, So.
Well, the thing is, a wise commodity investor once said, and I forget who it was, that he's never known a shortage not being followed by a glut. And so, in this case, it's only a question of time before you get a lot of uranium supply. So I don't know how long this spike will last, but I bet it won't last forever. And he also said a glut does not necessarily lead to a shortage, but shortages always lead to gluts. So anyway, I'd just be wary. I think you've done fantastically well out of it. If you're not sure, find a better opportunity somewhere else.
Yeah, has anyone else got any opinion they'd like to speak about uranium?
Actually, Orange Cannon, you're bullish uranium. Can you come on? Just share your thoughts. Right, he's trying.
Okay, did he send you a message in an IM?
He's typed, so he's trying to get his microphone working. Okay. Carry on. He'll come on in due course.
Okay. Okay, we'll give Orange Cannon. We'll invite Orange Cannon to interrupt when he gets back on, and I'll go ahead then. So I decided in the end to go. I've been looking into the banking, like I say, and the thing is, before I invest in banking, I need to understand money. So I started doing some real basic research on money and banking. And it is amazing how little I knew about money and banking. I mean, it really is. And then amazing how obviously 99% of people have.
Cool. Am I on mic?
You are on mic. Yes. Yeah.
Can't hear you.
Good to see you again, Orange Cannon. Thanks a lot. So we can see you.
Carry on.
So so and it's amazing, 99% of people have no idea how money works, and PHS is saying here it's a very deep rabbit hole. It's as though looking at a glass world, and that's exactly it. It's just incredible how people have no idea about how money works, and yet it's the most important thing in most people's lives. Kind of, not the most important thing, but you know what I mean. And I learnt so much just the last week going on Wikipedia and typing in money. So Orange Cannon, interrupt as soon as you're.
I think I'm back.
Are you good?
Can you hear
Perfect. Yes, can hear you good. Yes.
Cool. That worked. 1 second.
So what's your feelings on uranium?
I've been doing, trying my best to avoid doing too much YouTube stuff, but I subscribe to another couple of services, sort of newsletters on uranium and, on sort of natural resources side, so uranium and gold. Uranium, I think, will be going for a few years. I don't think it's going to massively spike. It might keep climbing eventually, but spot isn't a massively good representation of what's really going on, is it? Because that's, yes, there's some purchases on spot, but most of it's on sort of long-term contracts. So only when people really have to buy does it go on spot. So it's going to go up and go down, and that's great, but for the miners or for the guys actually producing, those guys will just be coining it in for the next, hopefully coining it in for the next 3 to 5 years until eventually supply catches up. But basically, Kazatomprom, they're going to be flat. Those guys are the OPEC of the uranium world. They produce 45% plus, I think it is 40% plus.
Mm.
They were supposed to be ramping up. They can't, so they're going to be flat for 2 to 3 years minimum. Cameco, well, they're trying, but everyone's struggling to bring production on because it's a struggle. They've not been producing for 20 years. Now go get your miners back. Well, there aren't any, so they're having to go from scratch virtually. So yes, there are mines coming on, but they're slow, and even I can't remember which one it is. There's one American miner coming on next year, I think it is, but it's not enough. None of it's nearly enough. So, and that's without it ramping. In terms of the volume of uranium of new nuclear power stations coming on. So, I think it's going to keep going basically for a while. I think looking at trying to use fundamental analysis on the uranium spot price is a bit of a mistake. I don't think it really. No one's trading it. There's no speculators involved. It's not like a normal market. It's just they update it once a week. With whatever trades they've managed to find. It's So spot is fine, but I don't think it's massively representative of what's going to happen. So
are you interested in the actual spot uranium commodity or in the miners?
I've got a bit in yellow cake, but that's just recent. So I've got a small amount in that, but I thought I basically missed that. So I haven't jumped massively on that. I've got a reasonable chunk in Kazatomprom. It's risky, it can get nationalised. Well, it's a sort of nationalised company anyway, but it's a reasonably risky thing to do. So if that gets taken over by Russia, because if they go steaming in, oops, it will get I'll lose it. So be aware. But it's it's a good play on uranium in terms of it's going to be the Saudi Aramco of uranium basically. Other places I've got cash in several miners that are sort of pre-production, so they're coming on hopefully in the next 2 to 3 years to start to make use of the uplift in prices over the next 3 to 5 years. Hopefully it's not going to spike. Hopefully it will just sit here or go up another 50-100%. That's great, but you just want it to be sitting. Well, hopefully it will just sit somewhere where the miners just continue making money.
Yeah.
So, sorry, I've rambled.
No, you haven't. That was very clear. I mean, what I'm thinking is if it maintains the moving averages here, and continues above this long-term moving average, then that would be, I'd perhaps be quite happy to just hold it as long as it stays above that moving average, and maybe I can wait for when it really does pierce it to.
I looked a little bit at yellow cake, and obviously that's a play on the spot price. But it trades at a 20% discount to NAV anyway.
Yeah.
So,
by the way, there's a website here, which someone has done. Someone in one of the forums, the London Southeast Forum, and they actually update the yellow cake discount to NAV. So I'll put a note and I'll put that in the Discord.
Cool.
So people can check it out. But that way you can. That's helpful.
I mean, I think, like I said, spot prices. It's an indication of what's going on, but it's a pretty illiquid. It's not like the oil price, and with paper barrels out trading the real commodity, if that makes sense. The spot one is very liquid, very 20 trades and that's your price. So how good is that as a measure as to what's going on and where it's going, if that makes sense?
Yeah.
So, I don't know.
Have you? What I tell you, I mean, what I'd say is, the moment I've heard that Kazatomprom, they've changed CEOs about 4 times in the last year or something. Because
they've been pressuring. Basically, Russia has. There's been pressure for their biggest mine that's coming on board to and basically that's essentially a joint venture with, is it Rosatomprom? Sorry, well, the Russian uranium, so the Russian uranium agency, and also a whole bunch of oligarchs. Not quite sure you want to say that, but they were essentially apparently pressured by the Kazakhstan sovereign wealth fund, who essentially own Kazatomprom, to do this joint venture. And can you infer that Kazatomprom didn't want to do that, or the management didn't want to do that, because they've been rotating CEOs and many other people on their board positions. So yes, it's a warning. They're being pressured to do stuff that they don't want to do. They still make money, well, hopefully. But yeah, it's risky. Yeah.
I mean, myself, I wouldn't invest in them because I'd be scared of the Russia risk, particularly after recent events. But
Exactly.
but I'm very interested in Cameco, and
yeah,
I am thinking about Cameco actually.
Yeah, that's the first port of call for anybody investing, generally, and also for generalists coming in. So it's never going to stop going. It's also a good play on the wider nuclear play, if that makes sense, because they don't just mine. They do. They're in Westinghouse now. They do enrichment. They certainly do part of the fuel chain cycle. So it's all quite interesting. So that's worth. Yeah, I think it's gone already. I was in cap, so I'm up quite heavily on that. So, but Cameco's already gone pretty bonkers. Yeah, exactly.
Yeah.
So I mean, I started looking this at 2022, I think it was. So
nice.
So I've not gone with Cameco at all. I ignored that.
Oh, okay.
I went cap. Yeah.
Yeah, because I was looking at I was actually looking at them at 2020, and because I hadn't signed the right forms or whatever, I wasn't able to invest in them with my bank, and so that's why I invested in Yellowcake, but not. But do I wish I had invested in them back then? Because
it's only a double.
Yeah, I suppose
or
so.
Maybe
But
2020. No, you're right. It would have been 8. So yes, that's massive. Yeah.
But yeah, now it's difficult to, But maybe if I was to sell the uranium I have left, I might treat myself to some Cameco with some of the returns, which would be, But I wouldn't dare. Yeah, I wouldn't perhaps. Well, I'm very interested in them because in the long run, they are a miner and they have the full fuel cycle stuff. Because they actually make nuclear power stations, don't they? Through Westinghouse.
Yeah, they own Westinghouse. Yeah. They took that over. That almost put them bankrupt. So yeah.
So that's an amazing thing, because the moment if they start building nuclear power stations all over America, like they're talking about, that's got to be good for Cameco.
Yeah.
So
that'll take a long time, though.
Was it Toshiba? Was it okay? So yeah. So I think if you want to go near this stuff, go do some reading. Go do some find some good analysts that are putting stuff out via interviews. Obviously they're all talking their own book and stuff. So how much of this stuff, any of this stuff, can you believe? But yeah. Don't just go, oh yes, someone's making money on it, dive in. But similarly, and also be aware of geographical risk and geopolitical risk. So yeah, stuff I've got in cap, if it goes belly up, I'm not screwed. It's not the end of the world. It's a chunk, but it's not significant, if that makes sense. It's not overly significant.
Yeah.
Yeah.
Great. Well, thanks a lot for your input on the miners.
I'm happy to bore anybody to tears. Just ping me on Discord, and I can ping you. Ping anybody stuff that I've come across. If that makes sense.
The PHS has said Westinghouse bankrupted Toshiba.
Yeah, I knew they did somebody. Yeah. But I'm pretty sure it was now in. I thought Westinghouse was now in Cameco, but I might be wrong.
Oh yes, it is. Westinghouse is now. They must have bought it off Toshiba.
Mm-hmm.
Yeah. British Nuclear Fuels Limited. Wow. So does anyone remember
Wow.
British Nuclear Fuels Limited? That was when I was a paper boy.
Mm.
Do you remember, Keith? British Nuclear Fuels Limited.
Remember the initials?
I didn't realise they were listed. Actually, I certainly remember the name.
I think they were listed, and I can remember as a paper boy reading about that.
If, as an aside, if you have a spare half an hour on YouTube, go and watch the something on the Windscale nuclear disaster in Britain in the 50s. It's pretty shocking, actually, about how it was all covered up, etc., etc. And frankly, just the general level of incompetence is quite frightening. Anyway.
Yeah, there's a reason there's a reason it's one of the most tightly regulated industries in the world now. So yeah, people complain about it, but there's a reason, I guess.
No, absolutely. I mean, actually, the number of deaths from nuclear is, tiny. I mean, it's one of the safest industries. We should absolutely be going nuclear.
Yeah, I mean that's the other reason I'm quite happy to invest in this stuff, because I think it's our way out of many issues. But it's going to. My assumption was the world's going to screw it up for 15 years, 20 years, and then eventually go, oh yes, we better go nuclear. But it seems to be happening rather rapidly now. So I think people are already thinking, that they're going down this route of trying to give up nuclear. So that's one of the things that came out of the last COP conference. So hopefully it will accelerate. But yeah.
Okay, so quick quiz for you. Which form of power has caused the most deaths in a single accident? Okay.
Hydroelectric.
Hydro, yeah.
Hydro, yes. Yeah.
Yes, it's hydro. Chinese dam burst, I think, in the 60s and killed between 50 and 300,000 people. And then not sure which, that's pretty shocking range, I think, in itself. So with that, all energy systems are dangerous. And, people exaggerate the risks of nuclear. And what we think of as, very safe form of energy, renewable hydro, is actually the most dangerous if you look at just the number of deaths caused.
And what will happen is, just as nuclear, just as the public was kind of, it was all hidden, or basically there was lots of kind of propaganda to keep the public subdued back in the days when nuclear really was dangerous. Now that it's relatively safe, I think there's still going to be a big greenwashing, a big kind of, all the propaganda machines will be in full force now that it's the mandated best form of energy.
I think some of that's shifting. As for example, some of the Swedish Green Party have embraced nuclear, as have some of the Scandinavian countries, and it's that's that mentality spreading, as in it's better than fossil fuels.
Yeah, no, that's what I'm saying. That's what I'm saying. Now that it's part of the green zeitgeist, now that it's part of the green kind of, now that it's on the green bandwagon, it's kind of seen as the answer to fossil fuels. I think there'll be lots of government kind of propaganda, and the populace will be totally pro-nuclear, kind of just like they were in the 60s. But it's amazing how things can come in and out of trend, regardless of the science or anything. when it suits the global economy, something can very quickly become like a poster child. Just as easily as it can be demonized when it's out of fashion, like nuclear has been for many decades.
Yeah.
So, when's your stop time, Keith? Knowing that you've got a flight to Boston tomorrow morning.
I've got to get up early tomorrow to fly to Boston. So,
yeah.
Should we start wrapping it up, actually? And
now, even.
Thanks. Well,
okay.
In half an hour is my hard stop. So,
right.
What would you like to talk about in the last half hour?
I can talk about the banking stuff in the next half an hour. I could finish, we could wrap it up in 10 minutes, though, if that's much better for you. What do you think?
That would probably be better for me.
Yeah, okay.
Actually.
So we'll perhaps.
But before we go, let's just check. Well, we've got another one on the 8th of May, and that's in my diary.
Okay, yeah? 8th of May, 7:30.
8th of May, and there's a lot going on in the world at the moment. I think it's despite having got it totally wrong, it's a very interesting environment. So let's see. But when we talk again next month, it's I think we'll have lots to talk about.
Yeah, it'll be interesting, the S&P 500, whether it's will have kept on going, or whether what we've seen just the last week will develop into something. And I'm guessing it won't, but that's but there's potential there. The thing is, we've got the election at the end of the year.
Yeah.
How do you think, when Labour get in, how's that going to affect the UK stock market, or does it not make any difference?
Honestly, I suspect it'll make no difference at all. I don't think there's, I don't think they're going to do many policies that would impact stocks. I mean, has anyone got any strong views?
By the way, I mean, I just clicked on this by accident, but this is the UK tech sector. That's interesting.
What UK tech sector?
Well, exactly. There's only about 5 stocks in it, but let's have a look. Here it is, the UK FTSE 250.
Actually, Orange Cannon, on the do you know what they're going to do on the windfall tax for oil and gas? Because the Tories, I mean, this is frankly a spectacularly bad policy, the windfall tax. And they've extended it to 2028. It's just incredibly stupid. Are the is Labour going to do anything?
I don't. Well, they're not going to take it off. To me, they'll make it either permanent, or I don't know how much more they can turn it up. I think the thing I've read is they may stop giving credit for investments. Yeah. So at the moment, the windfall tax is offset by additional investment.
Yeah.
So that might go. So that makes it, that stops anybody trying to build anything for the future. So it will just kill it, basically, won't it?
That's just, and all the while we're importing LNG from, Louisiana.
I'm only keeping Harbour because they're buying, was it Winterthur? I can't remember the company, but they're basically going elsewhere. Yeah.
Yeah.
So for the price of that, I haven't got that much there. I'll just keep hold of it, and when it dips, I'll buy some more. But I'm not ramping it up for the UK exposure. It was also ridiculously cheap anyway. So as are most UK oil stocks, bar Shell and BP.
I'm hoping that the Labour government will actually be slightly more capitalist than the Tory government. And what I mean by that is this whole thing about like Thames Water. Yeah. The Thames Water thing is incredibly easy to fix. So all you do is you say, okay, the Thames Water can't meet its obligations to customers and the regulator, therefore it's going to be taken over and the assets sold as a going concern to a new whoever wants to take it on. And then, which is exactly what would happen in any other bankruptcy. And then the idiots who have lent it 18.3 billion get back 30p on the pound. And that is what should happen. And you know what's happening at the moment is under the Tories you have socialism for the rich and capitalism for the rest. And I hope that Labour government will come in and actually impose capitalism. Sorry, rant over.
Yeah, no, you're right. I mean, really, the Conservatives' policies have been very socialist for ever since the Cameron time. So there is no kind of capitalist-friendly party in the UK, unfortunately. So yeah, it's kind of doesn't matter if it's Labour or Conservatives. That's actually why on my front cover for the UK macro, I have both the Labour leader and the Conservative leader next to each other because it doesn't matter which one; it's the same thing. So
Yeah.
so take this as satire, please, everyone. But
Who's the
but
bloke
that's
at the top?
so that's the head of the World Economic Forum,
I see.
Klaus Schwab, is it? But yeah, so yeah, it kind of doesn't matter. Which kind of actually, although I don't think we'll be covering this today, would lead on brilliantly to money and the banking system because it's so kind of abstract what money is and how the economy works versus what it intuitively would be, or what people think it is. That kind of somehow that links up with the politics is kind of as ethereal a thing as money almost, or so I have I mean, I don't know whether to. What I'll just give. We can close off. I'll give a quick 2-minute thing, and then we can close off. But the main thing I got from this, with the help of PHS as well, who gave me lots of help on the Discord. The main thing I got from it is that when you look at the fiat banking system, the money basically doesn't exist until the banks loan people money.
Yeah.
So our entire money supply, that money supply is not created, is created by debt. That money is only created by creating a debt with the bank. And that forms the majority of all the money in the money supply, and money also. So, like, whereas in olden days you'd have what's called commodity money, where a gold coin is worth actually of value. We now have we don't even have representative money, which would be a £5 note representing that amount of gold at the bank. We now have only money of account and in fact fiat money, where that money just does not represent anything at all. It's just created out of thin air by the bank when they loan people money. So it's it's as it's really is. I went through this the last week, and it really is just mind blowing when you really understand that.
And when paper currencies first came in, they were actually first invented by the Chinese, and they tried 3 times, and they always ended in hyperinflation very quickly. So, the idea, that's why the gold standard was, popular, because it restrained governments from like printing too much money. Anyway, so if you want to record that at some stage, and you need a hand, then I'll be happy to be a foil if you want me to chip in some thoughts.
On what? Sorry, on the
money
thing. Yeah. Well, perhaps next time, the next one, we can go through the money thing. Yeah. So okay, I guess that's probably a good place to leave it then. I guess.
Right.
To end it. So we ended up discussing all kinds of subjects. Next time I won't have to spend so long updating my portfolio, because this was the first time I've done that. That was really good. I really enjoyed that, and thanks a lot for hosting this on your Discord, and thanks a lot everyone for your contributions.
Well, thanks for doing all the work, Rogue. We like somebody else doing all the work, and us, the rest of us just chipping in occasionally.
Well, I think you do enough with those the weeklies. Those weeklies look like mammoth undertakings. So, So, glad I can sort of add some value on the side, perhaps, with the Discord.
Right. Well, much appreciated, and thank you everyone for tuning in. And the next one will be, what day did we say? The
8th of May.
8th of May, 7:30, and Rogue will be talking about money. So.
Yes. So.
Yeah.
So great stuff then. Have a really good flight. I hope that all the seats. I hope that all the seats on your row are empty, like was the case with me when I got back.
Yeah.
And you can just sleep on the. It will be a really comfortable flight. Yeah. You can be laid back, really relaxing.
Well, I've got the marathon next Monday, and I just pray I don't get a cold before then. That's the number one fear. So Anyway. Well, night everyone. Thank you once again to Rogue for all his hard work, and hope to see you in a month's time.
Cheers, bye. I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.